Hi everyone, Frank Sanzeri here with Blue Insurance Group, and I wanted to make a quick little video today about buying landlord insurance and some of the key takeaways there. So whether you are a seasoned investor with a 100-unit apartment complex, a large commercial strip mall or shopping center, or maybe you're a first-time investor buying your first two-flat, the premise is almost the same. So let's get into it. One of the most important things that I think you can do, and it leads into a lot of the other points that I'm about to make here, is work with an insurance broker or an independent agent. These guys and girls represent multiple companies. So when you are working with somebody like that, they can advocate for you, and instead of worry about price first, coverage second, now they work with you and figure out what coverages you actually need as an investor, what's going to protect you, and then let's bring it to the different companies out there and find out who has the lowest price for the package that you actually need. Your local neighborhood insurance agent who has one company, they're going to try to make that sale. They're going to raise up your deductibles, cut corners, coverages that you might actually need in order to make that sale. And let's say you do go with them and your rate goes up in a year, they have nowhere else to take it other than, like I said, cutting corners. So it's not going to always work out in your best interest. A rate goes up with a broker, they can bring it to their other companies and find out if there's a better deal now at this point. So working with a broker, great idea. Second, let's talk about coverages. So some of the most important coverages that you should be looking at as an investor are, number one, the replacement cost. So that's what the insurance company determines it would cost to rebuild your property. And a lot of times when I'm working with a real estate investor, they get a little shocked about what kind of number we're coming back with. And that's because a lot of times they're getting a great deal on their investment. They're buying it for 60 or 70% of what the market value actually is. That's why they bought it in the first place. And so when your insurance agent's telling you that, or broker's telling you it's a good 30% over that, it can cause a little like, hey, why am I being insured so high? But just trust me, go with that, go with the replacement cost number. If you decide to insure it for lower than that, it can lead to big problems. There's something called a co-insurance clause in your policy a lot of times. And if you are not insuring it for full replacement cost and there's a claim, you might only get back a portion of that amount because you didn't insure it for full replacement cost. So trust me, just go with full replacement cost and then find out who has the best price based on that number. Number two, there are some endorsements and add-ons that you don't always want to overlook because they can really bite you if you're not taking care of that properly too. So one of them being ordinance and law coverage. So let's say you bought a building that is grandfathered in and is not fully up to code for, let's say, sprinkler systems. Let's say any property built after 1990 needs a sprinkler system in it. And yours was built in 1970, so you're grandfathered in, you're fine, and let's say there's a partial fire loss at your building. Well, now the village is going to say you have to put sprinkler systems in your entire building if you want a occupancy permit going forward. So if your policy does not have that, you could be in for a world of hurting trying to buy a $100,000 sprinkler system for your building. So make sure you got these simple add-ons, and you can talk with your broker about that as well. One of the most important things here, though, is liability coverage. So let's say it's an apartment complex. You have a tenant with a dog bite somebody. Your tenant gets sued. You get dragged into it too. Let's say you have a nail pop in one of your wooden steps outside, and the tenant falls, cracks their head open. You're getting sued for a ton of money. You always want to make sure you have adequate liability coverage. And you can there's no right answer there. Most policies will give you either $1 million or $2 million in the policy limits themselves, but you should really ask yourself, what do you need to make sure that your business is going to be sustainable in case the worst of the worst happens. And to piggyback on that, the most important thing that I think you can do as a real estate investor is make sure that all of your tenants, whether they're residential or commercial businesses renting from you, always make sure that they are insured as well, and that you, as a building owner, are listed as additional insured on their policy. So if they do something that they're negligent for, but you get dragged into the lawsuit, their policy will now defend you if you get dragged into court. So always make sure that they have insurance. Otherwise, your policy is going to be on the hook to cover them, even if you had absolutely nothing to do with it other than owning the building where that happened at. And one of the last points I'd like to make that we're seeing more and more of is the property manager. A lot of you guys work with property managers. I, for one, think they are great. They are an excellent way to take some of the headache away from the business that you're running day to day. And a lot of times they'll do it for a very small fee, and it's just worth it. But a lot of insurance companies, believe it or not, will not list the property manager as additional insured on your policy. And they want to be listed as. So let's take a look from their perspective. You're a property manager, you have over 1,000 units under your management. And let's say something goes wrong at 30 of the units throughout the year. You have liability claims. That property manager getting dragged into every single court case is not going to be fun for them or their insurance policy, because they are going to have insurance for their business as a property manager. They don't need to be dragged into all these little petty court cases that they had nothing to do with either. So it's just good business to add them as additional insured on your policy. That way your two insurance companies and you guys aren't at each other's necks about, who did what. Just find a company that can list them as additional insured, make everyone happy, build a good relationship with them, and that way they can advocate for you better as your manager. So again, those are some of the simple, basic, 20,000 foot view ideas of what you should be doing as a landlord going forward. But the biggest takeaway, I think, is work with a good broker, one you trust, one who's willing to make recommendations to you, who's not going to ram it down your throat either. It's ultimately your decision, but you want to have these conversations with your broker. If you're not, then I suggest you find one that is going to make these recommendations with you, because it can, save you in the event of something, terrible happening in your business, getting in big trouble there. So work with a broker. They can look at all these different coverage levels and everything else and shop the price to find you the best rate. Usually they will find you the best rate too. So that's it. Thank you so much for your time, and I wish all of you property owners much success this year. It's been a rough year, but things are going to start looking up. Thanks a lot.